Cashflow Diary Podcast, episode 267.
Welcome to yet another exciting episode of the Cashflow Diary Podcast, the podcast that teaches you insider tips, tactics, and strategies for creating leverage streams of cash flow into your life. Learn from top-performing entrepreneurs, business owners, investors, and thought leaders from across the globe as they share their secrets to success. Like what you learn on this and other Cashflow Diary podcast episodes? Go to learninvestingnow.com and sign up to receive powerful tips and information that will help you succeed as an entrepreneur and investor. Now, here's your host, investor, entrepreneur, business owner, educator, speaker, author, and master facilitator of Robert Kiyosaki's cash flow game, Jay Massey.
All right, ladies and gentlemen, welcome to another episode of the Cashflow Diary Podcast. I'm your host, Jay Massey, and I'm glad that you are here today because we're going to have a grand old time. What do I mean by that? I mean, we're going to talk about things in only hundreds of thousands of dollars today. That's what I mean. We're going to be talking about big numbers, also known as big cash flow, aka apartment buildings. So hopefully you're excited about that. I know that I am. And our guests today have been able to achieve something that you may not have thought is possible. We're talking 674 multifamily units across the U.S., and that's pretty exciting, which means they know how to rake in the cash. More importantly, there's a book out there. It's called Wheelbarrow Profits, and it sounds appropriate when you have that many units. And wouldn't it be nice to have cash arrive to your door in wheelbarrows? I think so. So we're going to talk to none other than Jake Stenziano and Gino Barbaro today. They have a podcast. You should totally listen to it because no one of us has this market cornered, and we all have a unique way to make things work. So let's learn from Jake and Gino. You guys there?
One problem, Jay. We're not talking hundreds of thousands today. We're talking millions.
Well,
okay, we got to jack it up. We're talking 6 zeros on those ones, twos, and threes. Here we go.
Love it, love it, love it. I was referring to monthly cash flow, not, the price of the property. How about that?
You got Gino on the call, We don't know what he's pulling in, but hey, all right.
No doubt, no doubt. All right, so I tend to ask everybody the same question first, and I want to ask you guys the same thing. I look at today's entrepreneurs, of which you guys are two, a lot like yesterday's superheroes, Batman and Robin, and you got Aquaman, and then some people still consider Green Lantern a superhero, which is great. And all of them.
I like the movie. I know it's tanked, but I still like the movie, okay?
Exactly. That's why I said some people. But all of those, superheroes and entrepreneurs, we have a lot in common. I mean, occasionally we get dressed up. We use our special skill sets to save people in our own special ways. But also, like, superheroes, we had a beginning. Before Spider-Man was Spider-Man, he was Peter Parker. He got bit by a spider, and then boom, he uses his skills for good. And there's this process of discovery that we all go through on this road to building cash flow. So before the units, before the book, before you two were even partners and working together, what we really want to know is who is Jake and Gino?
Well, Jake, let me go first since I'm the age and you're the beauty. The age here. Met Jake. I met Jake about 5 or 6 years ago. I was in the restaurant business. I've been in the business for 20 years. I fortunately actually just retired from that rat race 2 months ago. The real estate's allowed me to do that.
Congratulations.
It was great. Thank you. I met Jake, and it was one of the best meetings I ever had in my life. It was great. We sat down. We started talking about real estate. He was moving out of New York because of the prohibitive taxes, the quality of life, and that whole mess up here. So he decides to go down to Knoxville, takes the job. We keep in touch. I said, Jake, don't do anything foolish. Let's keep buying properties. Let's start buying properties together. So what does Jake do? He goes out and buys a house. I'm like, Jake, you're killing me. I mean, give me a little bit of time. So it pushed us back a little bit. But fortunately, we got back on the bandwagon, and we just started buying stuff. And I think it's a match made in heaven. I think we're two great partners. I love to work with him. He's a make it happen kind of guy. And I just love being in a partnership with him.
Gino, six kids, organic farmer, 2 best-selling books. Give the guys a little something more about Gino Barbaro. Who's the man?
It's my personal stuff. It's my personal story. The reason why I got into real estate was the who, what, how model. I wanted to know who I was, by how and by doing what. I know that for who I am. I'm a dad. I amassed 6 children, like I've amassed 675.
Amassed. I like that.
And I wish, I like to see if I could have more kids. I don't know if the wife is on board with that, but that's for another podcast.
No doubt.
Yeah, I mean, I love the family. That's who I am. I'm a family guy. So I said, how can I get out of the restaurant business, which is onerous on my time, onerous on my family life? So I turned to real estate, and it's really, really taken me 3 years with Jake to actually accomplish that. And people might say, oh, well, they got lucky, good market, good timing. It wasn't any of that. It was my should became a must. I wanted to do it. I had that passion. It wasn't a goal. It was a challenge for me. And my challenge was I want to get out of the rat race, and I want to start doing this full time. I still want to work 60 hours a week, but I want to work when I want to work. And that's what really propelled me. And anyone listening to the podcast, just find out what your must is. Because if you should lose weight, you're not going to lose weight. But if you must lose weight, you will lose weight. You'll find a way to do it. You'll get on this podcast. You listen to Jay. You want to become cash flow positive. You're going to find a way. So that's what has brought me to this point.
Love it. Bro. Did you say 6 kids? I just want to make sure that that's correct.
Yes.
You might be the first guest that has more children than me. Awesome, dude. Way to go.
How many kids you got?
I stopped at 4. I thought that was more than enough.
Oh, it's wonderful, isn't it? I mean, honestly, it's like the best thing on the planet. It's
I can agree because it's interesting to interact with them. My oldest is 19, and she's she thinks differently. She's completely different than all of the ones around her. But and then all the small ones, what they think daddy does, they just think daddy records podcasts and is on YouTube all the time, which is kind of funny. But nonetheless, it's definitely a different way of having contact with the family on a day-to-day basis. So I get you on that whole dad thing.
And what's great about it, Jay, is you're being the role model, right? That's what I wanted to be. I wanted to have my children part of my life, part of my business. And they were doing that with the restaurant. But at the same time, with this business, I can take them out to properties. I can have them sit on calls with me. It's just a totally different, all-encompassing thing. And that's who I want to become. That's what, took me over. And, I have a 16-year-old all the way down to a 1-year-old. So, it's my responsibility to teach them the right way and to say, hey, listen, nothing's for free. You want to go to college? It's great, but you know what? It's all about being responsible.
They're sharks too. They are little sharks.
Of course they are. We all were.
It's bad.
we got it trained out of us, and that's one of the things I love about being an entrepreneur is that if you're going to survive, you better learn to negotiate and make that happen. You got to talk for yours. That's the phrase that I grew up using. You got to go out there and talk for yours and make it work. So, but okay, before I get too far, because I've got a lot of questions for Gino, but who is Jake? Jake, share with the people.
I'm gonna piggyback off of what Gino said about wanting to create a life for himself, because I was a terrible student in high school. I did not. It was bad. I did not do well in high school. I actually took some kind of SAT prep. I don't know what it was when I was 16 or 17. And I was sitting there with my dad, and the guy basically looked at the two of us and said, college is not in your future. It's not for you.
Nice.
So I'm like, wow, I'm going to be digging ditches. And, I guess I'll figure that out. But so really, really discouraging. I ended up going to college, and in the long run, I ended up getting an MBA, and none of it did a damn thing for me.
Whoa. Hold on. You went to college anyway after Dad said no?
Well, I got into a JUCO school, right, for 2 years, and then transferred, ended up getting a phys ed degree because I grew up in a small town in New York, and I was a football player. I was a meathead. Okay, so what do I want to do? I'm going to go play football a little bit in college, and then, long story short, I got a phys ed degree, but I got my break when I got a part-time sales job at Radio Shack in college. I was working at UPS at 2 a.m., and then I would go to Radio Shack during the day. And the really cool thing about that was it was a 100% commission sales job. And these guys, I'm going to myself, these guys are paying me to talk to people. I'm going, are you kidding me? And so I ended up getting a bachelor's degree, got out, and started a sales career. Did a year of outside business-to-business cell phone sales, and then got into a large pharmaceutical company, and did that up until about 2 years ago, a year or two ago, when I was able to exit out of that into the real estate. But the way I'm tying this all together is that I was not a person that did well when people were saying, do this and don't question it. that didn't really work for me because I was always a hard worker. I was go out, make it happen kind of guy. Had always had amazing sales numbers, but did not perform well when I was put in a box. So the real estate, it just created the lifestyle for me because I can go out and do it now, and I don't have someone telling me, no, you have to do it like this. I can go out and create and do things the way I know are going to succeed and create new avenues and expand our business. So try to tie that all together if that makes sense. But that's a little bit of the business side for me.
Yeah, I like it. I mean, everybody comes from wherever you come from, but I love the fact that you both have, I'll say, an immense amount of sales experience, specifically when we're talking about outside sales experience. Because I've run into a number of people who think, Radio Shack, 100% sales commission, that's a form of sales. In my opinion, it's more like order taking because you didn't have to generate that lead. But learning to generate that lead.
Now we're gonna battle. Now we're gonna get in a fight. All right?
Okay, come on, bring it.
Come on now. Listen, I was hanging out. I was walking the parking lots. I was doing whatever.
Well, then you're different.
In the Rochester district for months on end. So listen, there's a difference because those people, yes, they're coming into the store, but there's finding the value, finding what those folks need, and generating those gross sales. So
okay, hold on.
I did the outside sales thing too.
Hold on. You're telling me you worked for Radio Shack and you actually went into the parking lot to grab people to bring them in the store?
Doing whatever it took.
You, sir,
Hungry.
Yeah, exactly. Now that's what I'm talking about when I say you got to go talk for yours. You did that. That's exactly what I'm talking about. So few people would do that. They would just wait for them to walk into the store and then take the order. Totally love it.
Quick story, and we're going to get so off, but the big thing at that time was cell phones, right? So I had surgery. I had an injury when I was playing football, and I had surgery while I was working at Radio Shack, and they knocked me out. I think it was for my ankle. I've had a couple, but when I was getting up out of the surgery, coming out of whatever they doped me up with, I was trying to sell cell phones to the nurses before I knew what was going on, asking them if they had a cell phone and stuff. So yes, business is always on my mind.
I love it. That's awesome. ATT.
A little creepy, but yeah.
Hey, if you're on 100% commission, there's never a bad time to make a sale.
That's right.
There's never a bad time. Totally. If you need a cell phone, I got you. Let's get you out of the hospital first before we talk about that. Okay, totally understood. Now, here's the question I have for both of you for sure, because Gino, there are a lot of our listeners who are actually wanting to be in the restaurant business, but here you are running from it. And Jake, there are a ton of people who would love to have, a decent job making good money and especially in this particular economy. But yet this is also something you're like, I don't want that. That's not where I belong. It's not my thing. And I'm curious, what is it about real estate? What are the benefits that you guys have now witnessed and seen that go, you know what? It was totally worth we'll call it the risk, the sacrifice, the making it happen.
Well, Jay, for me, it was doing it for 20 years. Once the '08 came, the downturn came, a lot of competition in restaurant. We're making money great in the first 10 or 15 years, but then after that, everything dropped off. And I started to realize that I just wanted to create wealth and I wanted to really generate that passive income. And, up here in the Northeast, when it snows, you don't get paid that week. You're the last person to get paid. Happens a couple times a year. It gets frustrating. You have no control of your destiny. I wasn't able to scale the business because I was, I had an immigrant dad who was like, you got to be here. You got to be here every day. So it wasn't a scalable model for me. And, you see these restaurants that are there that they are scaling, like a Papa John's, or they're scaling, but I didn't have that. I have a higher standard of quality with the food. So it's really difficult to do that. So I couldn't scale a business. I love the fact that real estate, you can scale a business. You want to do single family homes, that's fine. You want to do multis, that's fine. You want to do mobile home parks, that's fine. Notes, whatever you want to do, it's a scalable business. I like that passive income. I love the cost segregation that we employ when we buy these properties. It's not what you make, it's what you keep. Basically, so people don't understand that. So that's one of the biggest benefits that you can have as a real estate professional, as an investor. You become a real estate professional. Your tax ramifications are just fantastic. You buy these properties. Jake is managing them. He's getting paid as managing the properties, and then we have cash flow left over every month. There's so many benefits. The amortization, tenants are paying, for your mortgage. It's a wonderful device. It's just a vehicle like any other vehicle, but I think like the wheelbarrow, it's getting you from point A to point B, and I think this vehicle can get you to point B a lot quicker than most other vehicles.
Agreed, 100%.
I just want to touch on that a little bit as well, because Gino brought up the partnerships, and our partnership would not work if we did not have the same goals. From day one, both of us, I don't know how this happened and the stars aligned and put us in the same place at the same time, and we both wanted to create wealth and create passive income. And, Gino's brother, we met through his brother Marco, put us together in the same room, started looking at deals, and we had the same goals. And the other thing that was going on with me at the time when I started getting into real estate was my company had 7 or 8 layoffs, almost a layoff a year from the time that I was with. Yeah. So I was saying to my wife, this is not going to work long term. Or if if we get laid off, okay, then it's going to be hopping from this company to that company, trying to, scrape by doing outside sales, which I love. I love doing sales. It's who I am. It's part of me. But I wanted to create wealth, and I just have so much more ability to create different things within real estate. There's a million ways to make money in real estate, and I love it.
But Jay, what's great about our partnership, I was actually fortunate enough to take a coaching class. I did a lot of real estate coaching. I became a certified professional coach. So I really knew the model. I really knew what to target. I wouldn't say Jake that was green when we first started, but he didn't have the experience. I at least had the experience. We got together. I had a certain skill set. Jake has his skill set. We just got together and we made it happen, the both of us. So I think anyone who's starting out has got to get in touch with the Jay Massey. He's got to get in touch with the Jake and Gino. Get your education before you even start. If you got to spend thousands of dollars, it's okay. Learn from somebody who's made the mistakes, and just start. Because if you don't get that education, and me and Jake are the kind of two guys that like to jump right in. And I've jumped into real estate before years and years ago. I jumped in and I fell into a big pit. I couldn't get out for years. And you get discouraged. You're like, dude, what am I doing here? I'm doing something wrong. You're not doing anything wrong. It's called life. It's called failing and then having to do it all over again, because you're not going to get it right in the first time. So you make these small mistakes. And that's what Jake and I did. We started out with a small 25-unit property. It was $600,000. It was doable. We only had to put 10% down, 10% owner financing. So it was doable for us. So if and when we did make those mistakes, we could definitely learn from them, and we can just definitely course correct. And then from there, we started scaling up. So, I mean, anybody out there, don't hesitate to get your education if you're going to make this a full-time venture.
Now, I know what just happened, because someone said in their mind, did he say 25 units for $600,000? I know someone said that. And then someone said 10% down. Oh no, how did these guys do that? So we're going to get to that. But I've got a question, because you guys have achieved something that many, including myself, have found to be challenging. And you've done it for a while, which there must be some magic, some secret to how you have an effective partnership. So we want to know, because I'm fully with you on the whole, I'm only going to do the thing that I do best. And that's exactly how the team is structured. But when I've had partners, it's always been a little bit more challenging than when I'm just using contractors and vendors and we're putting the deals together in and of themselves. So what are like the 3 things that we need to do to have better partnerships?
Well, let me start with this off. I think this is vital, Jay. What you need to do is you need to sit down and create an operating agreement and make sure everybody knows what their responsibilities are. You need to be able to have those uncomfortable conversations. If you can't have an uncomfortable conversation with a partner, then don't have a partner. You need to know that when Jake is managing those properties, he has to get paid to manage those properties. That's not a job. That's not okay, I'll do this if you do that. Everything has to be spelled out to the T. Everyone has to know what's going on, because if something goes wrong, we have to all be held accountable. If he's not doing his management part, he has to get either bought out, or we have to find another management company, whatever it is. But you have to have everything spelled out in writing.
Yeah, and I want to go back to what you said in the beginning, because you said, I only want to do what I do best. That is definitely not what has made us successful, because when we started, we did everything. Gino and I, whether we sucked at it, whether we were great at it, we did it.
We were
just us, right? And I don't want to, because on every podcast we can't get away from this. We talk about it, the I'm a mentality. I'm gonna do this. I'm gonna do that. I'm gonna do everything, because that's how we started. I had one guy that was helping out with maintenance on boots on the ground, and we just plowed ahead. And Gino was doing bookkeeping. I was doing this. He was doing that, and it didn't matter. We had to get it done. So we're both, one thing that we have going for us is we're both kind of stubborn workaholics. So that was number one. And
I thought that was every New York person, but okay.
Yeah. Well, that's one thing. But going back, we had the same goals. That's, I think, what we missed on a little bit in there. We both wanted to create wealth and wanted to create passive income. But what we've found is that, so we both have the same goals. We both work our butts off. We have set guidelines throughout our operating agreement when we first started these things. So we knew exactly, we laid everything out. But when we started to grow, what we were able to do is we realized we're not good at certain things. So we scaled and we outsourced. So one of the things we weren't good at, Gino was better than I, was bookkeeping. So we partnered with a CPA firm. We have a few accountants that work on our stuff now. We have bookkeepers, and it's all done in the cloud and all this magical pixie dust stuff. I have no idea what's going on, but it works and they do a good job.
Right.
And we have a great team around us. We have probably 30 professional contractors, if you will, professionals and attorneys and all these people, great title companies. So it's finding, the things you do good at, excel at them. But what I'm finding now is the things that I'm not so good at, I like to learn them a little bit, focus on the good stuff, but also I branch out a little bit and start to dip my hands in some of these other places because I want to understand, I want to know a little more about it. A specific example is I've expanded, some of my knowledge when it comes to bookkeeping, and I have about an hour-long meeting with our staff every week, and we go in and they show me other things, and I expand my knowledge there. Doesn't necessarily mean I'm doing the work, but it gives me some good oversight as to what's going on. Some things that we're scaling up within the business, taking on different vendors, learning about new types of. I'll give you another example. Sure deposit is something we started using. I don't know if you're using it on your properties, but essentially it's for $87.50 you can buy a bond for a deposit. Company seems really good so far, and the tenant, it's a low barrier to entry, so the tenant can get in and you can get some protection on the back end if they break some stuff or destroy some stuff in the unit.
Did you say if?
Hey, there's good folks out there. I forget, I think it was Seth Williams who said it, that tenants can make you lose your faith in humanity. And I love that quote.
I just wanted to make sure, I wanted to be clear. We're trying to give people the real deal perspective here. You're dealing with people.
We love our tenants. They pay for our mortgages. They're great folks. We appreciate 99% of them. But that 1%, that's if and when, and we use it for that. So
yeah, totally understood. Totally understood. I'm with you. And yes, at the beginning, we all have very little choice of doing it all of ourselves. I learned very quickly that I was not good at paperwork and detail. And even though I bought QuickBooks multiple times, the first time I bought it, I was like, yeah, I'm going to do it myself. I never opened it, but a new year had come by, so I had to buy it again because it was the new edition, right? And I'm like, I'm really going to do it this time. And I still didn't get it done. Eventually, just like, you know what? I had to give it to somebody else. Here. Please, it'll finally get done.
Double down on the I'm a mentality.
I did. I've learned this in every department, from setting my own appointments to QuickBooks to everything except, I was gifted. I say God gifted me with no ability inside the hammer and nail department. So don't ever ask me to use those things because we're only going to end up at the hospital. So that's just. But that's just me.
We don't want an insurance claim, so let's stay out of that, right?
Exactly. Now, I've got an interesting question here because you're coming from two different worlds, so to speak, occupationally for sure, and yet you both decided that real estate was the way to move forward. And I find that to be an interesting decision given this day and age when we have so many options for cash flow. Real estate's not the only thing on the planet, but yet real estate seems to be the thing. But more specifically than that, apartment buildings. Because one of you said earlier, there are a million ways to earn money inside of real estate, which is true. And that's part of the confusion when someone's getting started. Like, what's the best strategy? I'm like, the one you'll do. That's how I feel about it. So why apartment buildings?
I look at real estate investing in a couple different modes. People confuse investing with speculating. If you're fixing and flipping a house,
I'm gonna like what I just hold on. I know you're washing dishes. I know you're walking the dog. Take out your phone, get the note application open right now, because the way he started that answer, I know I'm going to love it, and you're going to wish you were paying more attention. Okay, go ahead.
Well, like I said, people confuse investing with speculating. If you're going to buy a house and fix and flip it, that is not investing. That's speculating. That's like buying a stock at 4 and praying that it goes up to 6. You have no control over it. You fix and flip a house. You hope you're buying it in an uptrend, which has been uptrending for the last 3 or 4 years, and you're hoping to buy it for 30,000, put some money into it, and sell it for 50,000. That's speculating. That is not investing. I think apartments, if you're buying them correctly, we can go into cap rates, into cash on cash returns and all that. And Jake and I have certain criteria. If you're buying them on actual numbers and you're buying them at what you should be buying them at, that's not what you buy, it's what you pay. Remember that. So you've got to pay the right number. And we've been fortunate to do that because we've found motivated sellers. We've done our due diligence. We've networked with the brokers. We love the model of multifamilies because it allows us to scale. It allows us the economies of scale. I don't want to have 15 single family homes all around town, running around, taking care of the roofs, taking care of the hot water heaters. I'd rather have one 25 unit complex where everybody's there. I can have a resident manager on board. So it allows me to actually run a business and to actually build a team. I mean, there's other forms of investing that people talk about. The single families, I find that to be a little bit risky sometimes, especially in certain markets, because you lose that tenant, you're 100% vacant. So that's just how Jake and I think portrayed. I don't want to put any words in Jake's mouth. Jake, you can expand on that answer if you'd like.
No, it's the control your destiny part. I did not want to be at the whim of some kind of fund manager, and I did not like the stock market just because I did not put the education in to understand it fully. My mortgages are my 401k, and the tenants are paying that down for me every month. I love that because the money that comes in, I feel fortunate to save what I want, spend what I want, and the cost segregations are bringing my taxes down. So I know exactly what I'm dealing with. I like the brick and mortar portion of it. I can go drive up to the property, see it, know exactly what's going on with it, and I'm in control. Maybe going back to what I said earlier about, I like the freedom aspect of it. It's who I am, and it works well for me. Multifamily just makes sense. I don't mind other.
It makes dollars too.
Yeah, it makes financial sense because we're able to buy these things, cash flow on them from day one, build long-term wealth with them, get tax benefits. I look at the other places out there, commercial, if it's going to be a doctor's office, if it's going to have a good restaurant in it or some kind of barbershop, service-oriented commercial stuff I'm okay with, but I have a good thing going, so why switch it up? I'm going all in on multis and I'm comfortable with it. But yeah, if someone brought me a deal and it was a doctor's office and maybe had a barbershop next to it with stuff where people had to go to, I always joke around and say people can't live in the internet, basically meaning if you can buy it on Amazon, I don't want to invest in a brick and mortar location for it. So that's my why.
And Jay, that not to denigrate the other types of investing. It's just that we found our comfort zone.
Exactly. Yep.
And we found our niche. And I think anybody out there, the first thing you're going to do if you go into real estate, you choose your niche. If you're going to fix and flip, that's great. I want you guys to get online, websites like Bigger Pockets and whatever. Start reading these books, start learning about it, start talking to mentors and coaches and really learn that niche and try not to do 15 different things. If you're going to focus on that and really learn it and master it. Once you've mastered it and you've done it really well, if you want to go into another niche, then move into another one. But you don't have my permission to do that until you master it because you really have to know what you're doing before you can go into something else. Because then you're going to be starting to chase rabbits. And when you start chasing rabbits, you get nothing accomplished, basically.
Indeed. And I'm glad you said that because that is a common theme is like trying to do all of these things so that I can underscore what he said to be very clear. If you're going to focus on fixing and flipping, that means you should completely ignore everything else. Yes, I know tax liens are awesome and you can buy them for very, very little, but you are ignoring that right now. Right? It doesn't mean opportunity isn't there. It's just not there for you right now because you're focused on the area that you're going down. Now, you guys said
know why you're doing it too, right, Jay? Know why you're fixing and flipping. If you're doing it to get chunks of cash so you can later invest in multis, that's great. But know why you're doing it. Don't just do it to do it.
Agreed.
Yeah.
Work for work's sake never works. And that's just not fun. But you said something, I believe it was you, Jake, said something that I have only heard myself say, and people have often asked me why. So I want to hear your answer and expand a little bit more because people have asked me more than once, Jay, why don't you have a 401k or a retirement plan? I'm like, I own a lot of buildings. So I would love for you to expand on that so that they can hear it from another perspective.
Sure. And just to be extremely clear, I had a 401k. and I took that money away from the 401k because it wasn't serving me any longer. Basically, I took the money out of the 401k, and I was fortunate to have cost segregation studies in place to help with the tax consequences of that. Now, the reason I do not have a 401k is because we have 30-year amortizations. We're paying these apartment buildings off over 30 years, and the tenants are paying down those notes. So over a 30-year period, we will own the buildings free and clear because we are buy and hold investors. So instead of, right now, we'll take an example. We have a $5 million mortgage on a 136-unit building. Well, at the end of 30 years, that building will be worth a lot more than the $7 million that it's worth now, and we will own it free and clear. So I don't need to have a 401k set up, seeing that building will be paid off free and clear. I'll be cash flowing on it. I can sell it if I want. I can refinance it if I want, which I would probably do. Take the money out tax free if I needed some, and that's my strategy, and just to keep building the portfolio, and that's why.
Agreed. And this would be the proverbial mic drop, people, so that you understand it's a higher level of financial understanding and education that makes these things possible, so that you don't always have to use the traditional vehicles that are out there. So, Gino, what I would love, though, because both of you have mentioned this more than once, and I know what it is, but I also think it's important that other people hear someone else's perspective of why cost segregation is so powerful.
Okay, so before we get into a conversation about cost segregation, I'm gonna just say that there are many benefits when it comes to real estate investing, and many of you are familiar with them. I even went so far as to create a 4-part video course for you so that you could learn even more about them. Just go over to cashflowdiary.com/money-tool, MONEYTOOL, cashflowdiary.com/money-tool. It's a 4-part video series, teaches you about the major benefits inside on a financial transaction as it relates to real estate and business. And most importantly, it can help you with creative deal structures, raising capital, and figuring out how to actually make deals work, including understanding the value of depreciation. I get into some numbers. You can pause and rewind and really learn a whole lot. Again, just go over to cashflowdiary.com/money-tool. Again, cashflowdiary.com/money-tool. One word all the way through. Let's get back and find out more about cost segregation.
Well, basically, cost segregation is actually segregating out the fixed assets. So let's say you have a building, you have a guy or an accountant. This is usually a gentleman who actually specializes in these studies. We've got a great team member down in Tennessee who does it, goes on the property. He segregates out all the fixed assets, whether it's the roof, whether it's the wiring, whether it's the hot water heaters, the appliances, the flooring, and he actually accelerates the depreciation to 5 years. And that's why you get all those massive losses on it. And then what ends up happening is every year or every day or every month that you put in new appliances or new capital expenditures, they go back on that 5 year. So you're really accelerating the depreciation a lot. And what's really unbelievable that I learned about cost segregation was you see a lot of these hotels that are constantly every 4, 5, 6 years of giving themselves a refresher. What they're basically doing is they're using the tax code as a vehicle to actually put money back into their business and get that money depreciated, accelerated a lot quicker. I thought they were just doing it because they had a ton of money, but they're doing it because they keep up with the Joneses. Plus, they're getting that cost seg back every 5 years. It's really amazing. It's an awesome tool, and this is something that people are going to go, "Wow, it cost $20,000 for a cost seg study." Yeah, but that $20,000 just saved you $150,000. So it's apples to apples. I mean, you really have to go out there and really think: is it going to work for you? Now, maybe on a duplex it might not work, but when you get into 4, 5, 6 units, 7 units, it's always worth, taking a look at it and actually getting an opinion about it. Because, I mean, it's really, we're just going to keep buying. This is one of the reasons why we want to keep buying, because we've bought in the last 3 years, we've accumulated all these assets. We just want to keep purchasing them to get our income taxes down for the next 5 or 6 or 7 years.
That's really interesting, because my view on it is it's great if your intention is to keep buying. If you keep buying, because you're gonna burn out the big bulk of the depreciation within 5 to 7 years. If you keep buying, the party keeps going on. If you stop buying, then the depreciation will eventually stop, and you're going to be paying a bunch in taxes. So if you're going to do cost seg, have the mentality that I'm all in. I'm going to continue buying, and the party should keep going on depending on legislation, et cetera.
But Jake, there's always other ways to defer those taxes. If you have a lot of the cost seg that's on after 5 years, we'll just do a 1031, sell that property.
I don't want to sell, man. I don't want to sell it.
Well, he doesn't mean sell. He's exchanging. He doesn't mean, yes, it's not going anywhere. He's just changing it to a different building. It's not going anywhere. Your baby is fine.
They sell, he panics.
I know. I've had that similar reaction because people, ask me all the time. I was like, no, I don't sell anything. I might exchange it for something different, but selling is not like in my vocabulary. So it's not a word I'm typically known for using, but I understand where he's coming from, but I also understand where you're coming from. And I'm just getting excited because everybody needs to understand these concepts. It's like, so Jake, have you ever asked yourself, why didn't I get this in high school?
High school don't like me, man. I know the answer is because basically the idea behind the education system is to create a society of employees, right? To keep everything moving forward and keep the status quo. So that's they're not going to teach this stuff because they need folks filling those jobs. So,
but Jake, what I find to be incredible though with the tax code, if people really delve into the tax code and they see what the government gives to real estate investors as breaks or as benefits, they're going to talk about it as corporate welfare, but they know that the government cannot provide this housing. So that's why they give these entrepreneurs the ability to, write down taxes and all these benefits, is because they can't do it themselves. So it's a real catch-22. It's a weird situation. You're trying to create employees, but at the same time, you need guys like Jay and Jake and Gino to create this entrepreneurial spirit and this actual business model and actual affordable housing. So if people learn the code and learn what they should be doing, it's a real no-brainer.
And when you do a deal, everybody eats. Right. And the reason they put these cost segregation studies in place and they allow you to do them is because it stimulates the economy and it's proven. So it all makes sense at the end of the day.
I agree. 100%. Now, correct me if I'm wrong. It sounds like you guys primarily buy things that are already occupied.
Yes, we don't build.
Okay, no.
But we are going to build this year. We got 16 units we're going to build. So that's first time. Oh, man, watch out now.
I know, learning and expanding.
Yeah, Jay, we like to buy stuff that's I would say stabilized. I mean, at least 80% occupied. We love the micro repositionings or sort of momentum plays where you go in, you fix it up a little bit. I don't see value in buying a property and having to rip stuff out and having to put $5,000 or $8,000 per unit. It's a lot of heavy lifting. It's a lot of risk. You have to, it's a different business model. You want to get in, have investors, and get out. That's where not the value is for us. That's a lot of work and it's a lot of risk. We just like to look at stuff that needs a little bit of, occupancy increase and just a little bit of deferred maintenance. That's what we're looking for.
And this is why I love real estate investing, because again, you said there are millions of ways to make money, and it's all comes down to the perspective, because I am on the exact opposite end of the spectrum in that I prefer things vacant because I don't want the risk of all of those 50, 60, 70 other relationships that are already there that I have to vet and make sure are the right kind of people. And I would rather take on the work of knowing, maybe I'm more of a control freak. I just want to know that all the stuff was done right when it went in. And that's typically where I come from. And that's the beauty of real estate investing. You can have individuals who both look at and do and use the exact same vehicle in two completely different ways, play in the same sandbox, i.e. same city, same state, same country, and it not really matter because there's tons of opportunity. Now,
to go around.
I would say somewhat because, do you guys ever get the question like, why did you write the book? Why do you help other people? Do you ever get that question?
Because Gino's crazy and he pushes me.
No, not crazy, not yet. I'm. It's part of my being, I guess. I'm a dad, so like I said, I've got 6 kids. I love to teach, and it's I've lived by the mantra: learn, do, and teach. So I'm learning. I've learned how to actually doing it now, and I just want to give back. And by actually teaching it, believe it or not, you learn a lot from your students. You learn a lot of stuff that you would never say, I'm gonna sit down and read about this. You start learning more. You start expanding your horizons. You make these connections. Like I'm connected with you right now. I feel great. My energy level is raised right now. I'm really enjoying this. So when you're teaching people, you're making such great connections with people. That's where I'm looking for. And you're giving back. You're giving back to somebody who can actually get out of the rat race. I mean, that's like the most gratifying thing to me, is actually help somebody go to their passion, let them realize what their passion is and work towards that passion.
Agreed. So what would you guys say is your greatest achievement as it relates to real estate specifically at this moment?
Gino, what do you think? You think it was Jefferson City, or you think it was Park Place?
Probably both. I mean, I think they had different elements. I mean, the first one was 136 units. We bought it for $4 million. It was generating $53,000 a month in rental income. Last month, it hit $92,000 a month in rental income.
Nice.
And yeah, we refied it. We were able to withdraw $1.6 million of equity out of the property. Now it's worth $7.5 million, about 7.5 right now. And the horizon's been 2 years. Definite value add. I mean, it was a tremendous deal for us. I could say we were lucky. It was on the market for 6 years. Nobody wanted to touch it, but
nice.
We were fortunate, and we just ended up buying a deal last year in August. It was 281 units, valued at $11 million. We had bought it with no money down, 20% owner financing and 80% bank financing. So, I mean, that's a different model. Were we able to do that on our first deal? No. But what happens is when you have the credibility, you have the niche within the niche. We were looking for mom and pops. That's what we look for. You have the relationships with the banks. Everything's in place. Harder you work, the luckier you get. The luckier you get, the harder you work. So we were just fortunate to be able to be, in the right place at the right time.
Agreed.
And on that last deal, we increased the gross income, I think, from the time we took over till last month by about $34,000 per month. So that's been a great success for us as well.
And the thing that I want to underscore is that often, especially in the marketplace, you can hear, do this with no money down and make a few $1 million. You guys are basically saying that, that you can do that. Probably not at first, but
not on every deal. Either.
And not right.
Yep.
I just wanted to put it out there that what they're hearing, it's not that it's not possible. It just might not be possible for you yet.
Well, Jay, let me expand on that thought real quick, just for owner financing, because I think it's a vital part of real estate, and people don't understand owner financing. Owner financing is simple. I'm going to break it down to you this way. You have to find the property that a seller is motivated, whether he's divorced, leaving town, out of state, he's retiring, bad health. He just doesn't want the property anymore. It needs to have a substantial amount of equity in it, and you need to be able to actually talk to the broker and talk to the seller and explain to them what seller financing is, the benefits to them. And then if you have all those components, you can put the deal together. We had that on our first deal, and we had this on the 281 unit deal. You need a motivated seller. Without a motivated seller, you're not going to get a deal in real estate anyway without somebody motivated, because you're just going to buy it at retail. So you need to be able to solve a problem. So the more problems you solve, the more people you serve, the more money you're going to make. That's whether in real estate or in life. So that's really important with owner financing. And also, you need to have it out there. You need to tell the brokers, that's what I'm looking for. It's not going to find you. You have to be out there looking for seller financing, looking for those deals that the banks do not want to put their hands on, whether it's an auto body shop or it's an apartment building that needs so much work that they're never going to finance it. Then you have the leverage is all on you, and you can structure the deal you want to. And that's how you guys end up making money.
I can't wait till everyone hears what you just said. That's what I'm excited about. Because it's like a revolution. Seller financing. Here we go. Hit the streets, boys. Because when it comes down to, these are tools that aren't taught. These are tools that most realtors don't know about, don't know how to use properly. But yet
that's the truth.
I see you've met him too, huh? So it's like, but that's the tools of the investor. I mean, it's like, hello. If you just wanted to do things the traditional way with the realtor and bank financing, okay, knock yourself out, but you're only going to get so far.
I like that.
And that's the problem, Jay. The problem is everyone's doing that. Everyone's trying to buy single families or little duplexes, and there's so much competition in that area that nobody wants the ugly duckling where they can go in, rip it out, fix it up, do what they want, force that appreciation, and go for it. That's harder. It's a lot more work. It's a lot easier. It's just like buying a mutual fund. Anybody can buy a mutual fund or buy a stock. Anyone can buy a single family house at a turnkey and say, okay, this is what I'm going to do. Are you going to do okay? Maybe. You might do all right. You might make 8-10%, but you're not going to create the wealth and generate the passive income. You've got to get in there and solve those problems.
Owner financing is real if you're willing to hustle. If you're just kind of tiptoeing, get 1 foot, little toe in the water, you're just testing it here or there. I'm going to do a deal. It's not going to work. If you're all in, you're out there hustling, you're talking, you're making those relationships. You will find an owner finance deal if that's what you're looking for. But you got to be willing to hustle and get out there.
Yeah, it doesn't, fall in your lap. I've heard the phrase that when opportunity knocks, it's usually work that answers. And this is exactly what they're talking about. And I'm hoping everyone's, like I said, taking notes, because at the end of the day, it doesn't just happen. So here's the question. When you guys are when you're getting started, I mean, you work today now with a number of different individuals across the U.S. and teaching and between your book and all the things that you guys have got going on. What do you see as what is the common elements that you see repeated over and over and over again that are stopping people from being able to exit that 9-to-5 job that they don't like?
This is Jake's favorite question, so I'll let Jake answer this one.
Failure to get their first deal done. It's the same thing. They're putting a little bit of toe in. They're not fully committing. They think they want to do it. They're there today, gone tomorrow, and they're not fully committed to it. If it's really what you want to do, it's not a pie in the sky. Go get it. Make it happen. It's what you got to commit to. If you're not committed to it, to getting it done, it won't happen. And it might sound strong or it might sound aggressive, but I truly believe that.
Well, Jay, there's another thing, Jay, though. I mean, everyone has a certain comfort zone. To be able to live a fulfilling life, you need two things. You need to be able to step out of that comfort zone, and you need to be able to grow, and you need to be able to contribute. And a lot of us, including myself, are stuck in fear, stuck in with our parents and our friends saying, real estate, what are you crazy? The toilets and tenants. Meanwhile, they never owned anything in their entire lives. So you're listening to no experience whatsoever. So we all need that growth in our lives. We all need to step out of our comfort zone, start pushing. I think Tony Robbins said it best. Let me paraphrase what he said. Basically, the quality of life, your quality of life depends upon how uncomfortable you can become. Because the more uncomfortable you become, the more you're going to be able to take challenges on, and the more you're going to be able to grow and expand your life. And if you're stuck, not willing to take chances and risks, you're going to fail at real estate. You're going to fail at life.
Well, okay, so now I'm going to play devil's advocate for the person that is listening and getting upset with you guys, going, but you don't know. But you don't know.
Okay.
I've got bills.
I want to take that right now. Because when I first started work with Gino, the best thing, Gino's been a mentor to me, and the thing I learned from him that has changed my life is self-limiting beliefs, what you just touched on right there.
Yep.
And it's, I can't do this because, it's not possible for me because. Go ahead, keep creating excuses and stay where you are. I'm fine with that. I'll go buy the property that you're going to look at. I don't have a problem with that, because it's all about the self-limiting beliefs. And if I ever hear myself saying I can't do it, there's no reason. If anyone else can do it, and especially when it comes to business, I'm not held back because I do not have the same jump shot as Michael Jordan. But in business, it comes down to how bad I want it, how hard I'm willing to work, and how bad I want to hustle to go get it. So I'm not going to be held back because it's not something physical like in sports where you may just not have that God-given talent to do it. In business, I have the energy, I have the drive, and if I want something, I will achieve it eventually.
And Jay, this is where I learned in life coaching. I became the certified professional coach, and life coaching teaches you all about that. We have those limiting beliefs. We all do. We all have those assumptions in life. Let's say you go out with a girl, you get married, you get divorced. The next relationship, you're going to say, "I'm assumed that it's not going to work." We have to really raise our consciousness, raise our level of awareness around this, and really listen to our own thoughts. And I mean, like Jake said, if Jake can do it with no business acumen, let's say he didn't. Really
I shouldn't have graduated high school.
Yeah, that's what I'm saying. I mean, so if he had stuck and said, "I'm not," I barely got an MBA, he'd still be there. But we all have those limiting beliefs, and we have to just really take a look and say, why can't you do it? There's no reason why you can't do it. And you can point to the hundreds of thousands of other people out there who have limited skill sets, and they can still do it. I've got so many people in my family that are from Italy, first generation. They can barely speak Italian, but yet they've created wealth. So I mean, it comes down to that limiting belief and that fear.
Jake, I have a PhD, public high school diploma.
You so smart, man.
But
high school diploma, I like that.
That's what I got. That's what I got. So I completely understand where you guys are coming from. I just want other people to hear that there isn't anything that's necessarily in the way at all with you, with ourselves, except ourselves in a lot of ways. I mean, yes, we were all dealt a hand. Yes, we didn't have and what we don't have, et cetera, but that's everybody. And it's learning to deal with those challenges. Now, here's the other thing that I think gets in the way, and I would love to hear your guys' comments on this one, but because there are some people who are, I would love to do real estate, but I don't know. What if the tenant doesn't pay rent? And what if this happens? And what happens when the asteroid falls on my building? All of those things get in the what ifs get in the way. How do you guys deal with that level of uncertainty? That is a real possibility, because we've all had that moment where you saw the news and you heard the siren and you said to yourself, please don't be my building.
Sure.
Well, Jay, what's great about that is the education part. You have to go out and get educated. And when you become educated about something, the fear goes away. And also you get back to the partnership. It's great. I love being a partner with Jake because I know when something goes wrong, I have somebody to fall back on. And it's also, I'm working hard because I know I have to feed his family. Well, people are willing to work harder for other people than for themselves. So I'm willing to put myself out there because I know he's counting on me. So that really helps out a lot on the issue. But I mean, really educating yourself and learning all about it, I think takes a little edge off of that fear.
I have a 3-part answer to that because I think it's a great question. Number one, why do you want to be in real estate? You got to ask yourself that question first. Number two, you can't play the what if game. I have this conversation with my wife all the time. And if you do want to play the what if game, what's the worst thing that could happen? If the building burns down, right? You should be doing everything that you're supposed to be doing on the front end. Make sure you're insured properly, right? We can buy insurance. We all have the ability to do that. Do the right thing, making sure you're maintaining these buildings properly. Let's hope everyone got out, everyone's safe. And at the end of the day, you probably will get more in replacement costs than your building is worth today. And unfortunately, you have to deal with it. Life will go on. Let's hope everyone's safe. And you may end up, in the long run, you could potentially end up better off for it. Just saying.
Agreed. I had a 30-unit building that was the exact situation. Nobody, save the one fireman, got hurt, and that's basically what happened. What you just described right there. I remember when I heard that it was on fire, I was like, "Oh God, this is not good." But my team, did what they were supposed to do, and everything happened like was supposed to. It was a process. I wasn't happy about it, but on the other end,
you don't want it to happen.
Obviously. No, not at all. Not at all. Wasn't like planned. It wasn't in my, hey, this is the day the building's going to burn. No.
But what if I'm working a 9 to 5 and I get laid off? Because I played the what if game with myself back in the day, and I ended up here. So.
Right, exactly. That's the what if they should be talking about time and time again. Now, here's what I know. I know there's a number of people right now who have been listening to us banter and talk and chat and go, wow, I like Jake and Gino. Now, what they're probably wondering though is, how can I get more of these guys? What's going to be the best way for them to stalk you? Because that's pretty much what they're going to do.
Probably come over to Gino's house. He's got an organic garden in the back and pick some tomatoes.
I got enough kids to feed, bro.
Okay, don't do that. All right. So jakeandgino.com. It's just how it says, jakeandgino.com. And to email us, it's the same thing, jake@jakeandgino.com or gino@jakeandgino.com. Easiest way to get a hold of us. Find us on iTunes. Check out our podcast, Wheelbarrow Profits Podcast. Twitter, Instagram, Facebook, all that stuff. So we're out there. Easy to find.
Excellent. Now, before I get to my final question, there's something I have got to know. Gino, Jake, please tell me you guys know how to make really, really good Italian food.
I learned from the best, and I got a dish on the menu at Gino's restaurant. So boom, take that.
Awesome. If I happen to
Gino has a cookbook, by the way. Just throwing that out there.
Oh, and a cookbook. Okay, see, now we're talking.
Family Food in the Fryers. He won't promote it, but I will. It's awesome. Go get it. Book rocks. Great food.
Awesome. Okay, because Italian food just happens to be my favorite. I'm not dropping any hints or saying anything, but I'm just saying that
it
happens to be my favorite.
His red sauce is off the hook. Amazing.
Got it. Now, before we end, let me ask the serious question here. What it comes down to is that there's probably someone who's been listening this entire time. They go, Oh, that sounds great, Jake. Gino, yeah, it happened for you. Jay, it happened for you, but I don't know if it's ever going to happen for me, but I'm willing to try. That's what's going on in the back of there. They're like, you know what? I'm willing to try. However, every time they think about the fact that they're willing to try, they got that voice in the back of their head. And I know you two gentlemen are familiar with that voice. You have done battle. You have wrestled it. You have strangled it at times.
Beat it into submission.
Right.
A little too much. Sorry.
Well, no, that's about what it takes. And they're still asking themselves those what if questions. They're still wondering, can this work for me? Will someone really take me seriously, or is it too late? And my question to you is, if that person was sitting in front of you right now and you knew beyond a shadow of a doubt they would actually do 100% of what you said, what would you tell them to do?
Make it happen, big man. Okay, Gino, you should answer this question.
Well, I would say to them and look them in the eyes, and I would really say, listen, is this what you want to do? Do you want to commit yourself to this? Because this is not going to be a 1 or 2 or 3 hour part-time kind of thing. You really got to jump in and immerse yourself. And if you're ready to do this, let's get going. And, we basically have a home study guide. We have a coaching program. Go out there, find somebody who's doing what you want. If you think Jay Massey's selling notes and he's great at selling notes or tax liens, you go to him, you become his student, mentor, do whatever you can to learn from the best. Because basically what you're trying to do is you're trying to find somebody who's doing it, learn from them. You don't have to reinvent the wheel. You just learn what's making them successful. And it's like a recipe. It's like baking a cake. Once you know that recipe, you just follow that recipe and you keep replicating it. You're going to get the same exact results. That's what I would do.
Yeah, and in all seriousness, Jay, my serious answer is it's up to you, because it's all out there. All the information is out there. It comes down to your energy and your will to make it happen, because the information is there. You could ask Gino, he'll tell you. You can ask Jay. The information is there. It's right in front of you. It's what are you going to do with it? Because Gino can't bake that cake for you. Jay can't bake that cake for you, but he can show you how. It's up to you at the end of the day.
Agreed 100%. I want to thank you both for taking the time, bringing your energy, and eventually sending me some Italian food, so that and taking the time to invest with us here at the Cashflow Diary today.
Jay, thanks. I had a great time.
Thanks, Jay.
All right, ladies and gentlemen, you know what time it is. It's time for you to move at the speed of instruction. What does that mean today? It means you should be typing jakeandgino.com. Why? Because you heard something that was interesting. There was something that you were ready to take advantage of. You want to get one step further. Well, move now. Not tomorrow, not when you get home, not after you finish walking the dog, right now. Because the law of diminishing intent tells me that the further between the decision and the action, the less likely you are to do it. So get it done. It's been fun talking to you guys today. I look forward to talking to you soon. Until next time.